Good afternoon and welcome to BizTech Asian Midday Market Watch. I'm Samantha Voon, and let's start by taking a look at the summary of market actions. So over in the US, we have a prolonged rotation out of tech stocks, which led to overnight losses on Wall Street. We saw US stocks benchmark drop from their record highs over the past 3 sessions. However, US stocks index futures saw a modest rise during Asian trading hours, indicating a potential easing of Wall Street downturn. Investors also have their attentions turned to upcoming key US earning reports, with major companies like Microsoft, Alphabet, and Tesla scheduled to report. Over in Asia, most Asian stocks declined today due to ongoing concerns about potential resurgence in trade wars between the US and China. Positive earnings from TSMC had minimal impact on continued decline in tech stocks. Tech-heavy indexes were the worst performance in Asia as the sectors continue to face profit-taking and a shift towards economically sensitive sectors driven by expectations of interest rate cuts. So over in China, we see Chinese stocks experience slight declines today caused by concerns over US trade tensions. We have media reports indicating that the US might impose stricter trade restrictions on China, particularly targeting its tech and chip-making sectors. We also have speculations about the potential Trump 2.0, who, as we all know it, has maintained a negative stance towards Beijing, and this also weighed heavy on Chinese stocks. Given the already tense trade relations between the two, this definitely adds to the tension between Beijing and Washington. Nevertheless, losses were cushioned by promises of a more supportive policy from Chinese government addressed during the third plenum. Over in Australia, the ASX 200 see a drop of 1.1%, with local stocks experiencing profit taking after hitting record highs earlier in the week. Over in India, the Nifty 50 is down 0.38%. In Singapore, the STI is down 0.81%. In Malaysia, the KLCI is up 0.2%. In Japan, losses in tech stocks contributed to a 0.14% decline in the Nikkei 225 due to weaker than expected consumer price index data. This has raised doubts about whether the BOJ, Bank of Japan, would soon raise interest rates. Over in South Korea, the Kospi dropped 1.47% amid losses in chip-making stocks. Overall, we see the Asian markets fell as the mood remained pessimistic. That's all I have for today's market updates. Now, to give insight into markets, we have our guest, Kelvin Wong, Senior Market Analyst at Oanda in Singapore. Kelvin, welcome to the show.
Hi, happy Friday and good afternoon to you again, Samantha.
Good afternoon and happy Friday. So let's talk about the latest Japanese inflation numbers. Maybe you can run us through that.
Sure. So if you look at the Japanese numbers for today, the latest one that was released just a while ago early to this Asia session for the month of June, is pretty encouraging. Why? Because it seems to us that the core inflation rate, which is excluding fresh food and energy, managed to tick slightly higher to 2.2% from 2.1% that was printed in the previous month of May. So that actually also maintain that 2% BOJ target as well. That what BOJ desired to see a kind of a stabilization of the inflationary trend in Japan rather than the continuation of a deceleration that has taken shape since the early part of this year, putting to a kind of a stalling or a halting process. So that could actually give BOJ more data to actually support them in this ongoing normalization policy in Japan, which has been decades of close to short-term negative rate, where they just 2 months ago, they managed to actually hike it to positive territory to continue in this slow pace of interest rate increase. So if you look at from this perspective from the FX market, it's actually pretty much encouraging for a yield steepening situation that is upplaying right now in Japan. That means we're talking about the longer term yields moving at a potentially faster pace compared to the shorter term yield. All right. So with that taking shape into play, that could potentially be, from a fundamental perspective, be much more supportive of a resurgence in this rather, we call it a pronounced yen weakness that was seen at the start of this year and even dragging into the second quarter of this year, where the yen actually tumbled close to a 38-year low against the dollar. And but do not forget over here is that at this moment, at this point in time, the very, very short-term perspective, we also got to be mindful of other factors that's playing out in the FX market right now, especially with this ongoing US presidential election that is taking shape. With the news flow that potentially Biden may be forced to actually step aside to allow another contender to come in to represent the Democratic camp, the Democrats camp over here, and that could actually see a bit of a muted reaction on the dollar yen. If we're talking about purely from a fundamentals perspective, that encouraging CPI numbers, that the core inflation rate up from Japan earlier on this morning, it should be actually positive for the yen. But in fact, right now, the yen has weakened by close to 0.2% against the dollar, trading much higher for what we see on this Wednesday, where it actually dropped close to about 156 figure level. So yes, rallied quite a fair bit, about one figure and 1.60 points so far. So the reason over here why we see a kind of a short-term dollar resurgence towards the dollar yen over here is that because of this weekend prospect that Biden will be kind of being forced to step aside due to his lower popularity against Trump, and given the fact that some of the congressmen in Democrats, the camp, are mindful that there could be a sweep on the House and as well as the Senate, with them totally losing control of the House and Senate, and that could actually force Biden to step aside. So if that particular scenario start to play out, getting much more prudence over as we speak towards the US session, we could see a bit of short-term dollar relief bounce in the short term. Why? Because do not forget, the thing about Donald Trump dollar policy right now, it seems to be very mixed over here. Yes, we know that trade wars actually we start to see dollar positive, like what happened in the past in 2019 when he first evoked the trade war China 1.0, US trade war China 1.0. But during a release on early this week by Bloomberg, it was an earlier recorded interview with Trump. Trump actually mentioned about the current dollar value is being overvalued against the Japanese yen. So he actually, if you look at this, his statement, he actually favoring a weaker dollar to boost American exports in the first day. So that actually also explain why the dollar yen actually tumbled by a fair bit or significant magnitude on the downside that we see on Tuesday and Wednesday, also being reinforced by this Trump statement during this Bloomberg kind of a interview session with him earlier on. So with Biden out of the picture, that could actually potentially may improve Democrat prospects by a bit of a margin ahead of this US presidential election, and Trump winning prospect by the betting markets will be slimmer. Then that will actually explain that he may not follow through in his implied policy of a weaker dollar, as we look at from his latest interview session with Bloomberg.
So Trump also gave his nomination speech at the Republican convention, right?
Yes,
Maybe you
yes.
can walk us through that too.
Yeah, so that was actually, in fact, the longest speech so far held by a Republican presidential candidate. So actually, that's lasted close about more than an hour, right, stretching about 90 minutes or so. So based on his speeches, nothing really that changed that much over here. So he's still looking out for making America great again through, we'll be talking about, number one, he's looking at two perspective over here is to reduce the number of immigrants coming into US. So that could actually shrink the labor pool significantly, and potentially it could reduce productivity, and the long term that could actually push up interest rate on the higher side of the story. So that could, by right, technically speaking, that could actually be beneficial for the dollar because of the push up in the longer and 10-year US Treasury yield. So what we could see over here is that that actually starts to actually be priced into the market already ahead of his speech over here. So that's why there's not much movement at this point in time. So one thing I'll talk about over here is he did make something about drill, baby drill. So that's actually mentioning more about the US energy market. So based on his speech, he actually wanting the US itself to be the top producer of oil again through this shale gas production. So that actually causing a bit of downside pressure in oil prices right now as we are seeing. So do not forget that we've had increase in oil supply globally from US itself after maybe Trump will start to evoke his preference of getting US as one of the top producer again. That could actually put downside pressure in the short to medium perspective in terms of current weak sentiment in oil price right now.
Mhm. Uh, Thanks, Kelvin. I just want to shift our focus over to Hong Kong and China for a bit.
Sure.
So they just concluded their third plenum, right? But we've
Yes.
seen a continuation of weakness in their stock market. Maybe you can share with us what's happening over there.
Sure. So, ahead of the third plenum over here in the couple of weeks ago, we do see that last week there was actually a short spurt up on the Hang Seng Index and the various Hang Seng major stock indices like the HSCI and the HS Tech. So that actually is in anticipation by market participants that hopefully this third plenum, we call it the communicate, we call it press release, the note form, will indicate some notes that the top policymaker is engaging or embarking on more forceful fiscal stimulus measure to jumpstart consumer spending. And however, yesterday's we call it the communication note form actually lack of any substance of such potential, much more forceful fiscal stimulus. So instead, the focus on the top policymakers is still skewing towards high quality investment, focusing on high tech industrialization. So a lot of state resources right now is will be continue to pump towards chip making, getting China chip makers to know the best in know-how in terms of technology, designing of chips to counter against currently US and their airlines hindrance or restriction of getting this know-how being flowed to China in terms of physically and as well as knowledge transfer. And also, China was keep on focusing on their green energy drive. That means EV. That means potentially getting more EVs with the rest of the world. So that actually could also potentially lead to more trade friction with trading partners, saying that hey, you guys now are keep flooding my market with cheaper EVs. I got to actually restrict you from coming in. So that actually causes a fear of trade war, not even with US and perhaps against other nations as well, like the Europe. Okay, which is considering more potential trade tariffs on China EVs. And due to the fact that if we start to see the numbers out from China on Monday, where the Q2 GDP numbers actually came in at way below 5%. That came at 4.7% year on year for Q2. So that's below the 5% mark. So why that 5% mark, annualized mark, is quite important because the China top policymaker before the start of the year, they will actually state a particular target for China to achieve their annualized targeted GDP growth. So they set this year at around 5%. And given the fact that on top of Monday, we also start to see retail sales inching down much lower as well. And yes, industrial production went up because of this ongoing high-tech industrialization program that is being kind of heavily subsidized by the state through enormous of resources that are being allocated to this area. But unfortunately, this industrialization program doesn't seem to have a positive spillover impact to consumer spending, consumer sentiment, which is still kind of lackluster due to a very weak, we call it a property market, due to the fact that the property market still has a significant weightage in China consumer wealth portfolio allocation also. So given that the Chinese top policymaker doesn't seem to shift the pendulum right now, even we start to see a very lackluster retail spending. So that actually causes the very short-term disappointment in the China stock market right now, not allowing any positive animal feedback looks refueling back into the market.
Mhm. All right. Thank you so much, Kelvin, for all of the wonderful insights.
My pleasure.
So this has been BizTech Asian Midday Market Watch. Be sure to keep informed on the latest market updates weekdays at 1 p.m. I'm Samantha Voon, and this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.